Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm your trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, then please subscribe to my YouTube channel for regular market analysis. And if you're interested in the analysis of other currency pairs like Euro USD, Pound USD, then you can check out the Forex analysis playlist on my YouTube channel. So let's get started. So this is the 4-hour chart of gold USD in front of us right now, and as you can see, the price of gold is trying to recover after this huge fall. But if we just focus on the market psychology here, or if we just try to read the market sentiment or emotion here, then we can see that okay, though market is trying to recover after the huge fall, but still there is the steam is missing. There is not much buying power in the market, because see, overall the trend of the market is still towards the downside, because until and unless we get a good V pattern or good buying pressure in the market, until then we cannot consider that we have seen a or we are seeing a trend reversal. Still, we do not consider this market as a trend reversal market, because see, right now you can clearly see that the price is struggling. Yes, it's trying to recover, but we can easily see that there is not much steam in the market, not much bullishness in the market. Because if we just focus on this particular portion of the chart, then do you still think that this is a trend reversal market? Do you still think the bulls have the required strength to take the price upward? No, not at all. Bulls does not have the required strength right now to take the price upward. Therefore, what should be a strategy for the day? First and foremost, I would like to discuss that we have got two levels here. You can easily see that we have got this level on the chart, uh, which we can expect that will act as a support for the market, and that level is 1750. So in your trading platform or charting platform also you can mark these levels. And on the other hand, we have got 1790, this red line. You can also draw these levels in your trading platform, because previously when market tried to go down, these levels somewhat provided required support to the market. I'm not saying that these levels are extremely prominent or very strong support for the market, but somewhat these levels may try to act as a support for the market in case we see some good selling pressure. And right now we can see that this is the 50 moving average, and during the last trading session, market just closed above the 50 moving average, and previously we have seen gold taking support at the 50 moving average. So it will be important, very much important for us to observe the market at the market opening on Monday. So let the market open on Monday and then just observe the price how it is doing. Because see, if price starts going up from here, okay, if price starts going up from here, because you can see that during the last trading session gold has formed two candles. Yes, undoubtedly those two candles are red, the color is red. But try to focus on the market psychology here. You can see that there was also price rejection from below, which clearly signifies that bulls were there in the market. Yes, sellers were dominating, no doubt about it, but bulls were also present in the market, and they were giving their best shot. They were trying their best to take the price upward. They failed, but still their presence we cannot deny. Therefore, there is a possibility that after the market opening on Monday, we may see some price reversal, or gold USD may try to go up from here. In case it starts going up after the market opening on Monday, you can, yes, you can take a small position and you can go for a buy order. This will be your target. The previous high will be your target around 1835. You can exit, or this will be your target. But keep in mind, the chapter is not over here. The story does not end here. If market reverses taking support at the 50 moving average, you can go for buy. Okay, but you can see that I have also drawn two lines here, and this is a RSI divergence. You can see that market is going up, market has formed a lower high here. Okay. But if you look at the RSI here, then RSI is indicating a different story. We are seeing a bearish divergence here. Bearish divergence means price is going up, but RSI is indicating us that market did not form a lower high here. You can see that market has formed lower high here, but RSI has formed lower low here. Whenever we get a difference like this, whenever we get a RSI divergence like this, then there is an indication that price may fall or RSI may, the market may go down. So RSI divergence is one of the most common and most popular trading strategy followed by people, traders all over the world. Even I do follow RSI divergence. Therefore, if market starts going down or if market fails to take support at the 50 moving average on Monday and starts going down, then I will not be surprised. And if you see some good selling pressure on Monday, and then also you can short the market. If price fails to go up and comes down or goes down, you can short the market, because RSI divergence is one of the most popular indicator. Even I do follow RSI divergence. So if market starts going down from here on Monday, I will also short the market. And if you look at the chart of US dollar here, as we all know, if dollar starts going up, then we will see some selling pressure in the gold, because whenever US dollar goes up, we see selling pressure in euro, pound, gold. And if you look at the chart here, if you observe the chart, then there is no denial that this is an ascending triangle pattern. An ascending triangle pattern is a bullish pattern. When we get a resistance on the upside, but we get lower highs on the downside, you can see that whenever price is coming down, they are forming lower highs here, which means that buyers are there in the market and they are very much serious in taking the price upward. As a result, they are not breaching the previous lows, and we can see that market is forming a ascending triangle pattern here. And whenever we get an ascending triangle pattern, there is a good possibility that market will cross this resistance level. So you can also keep your eyes in the chart of US dollar, and if US dollar starts going up from here, or in case you see a breakout in the chart of US dollar on Monday, then the price of gold may fall and you can also short the market. So if we look at the overall scenario of gold USD, then there is a bigger possibility that we may see some selling pressure only. The only thing that may take the price towards the upside is the support from the 50 moving average, but that is not that strong. It is a dynamic support. Therefore, the other factors are very much stronger in comparison to the 50 moving average, because it is just an indicator, and we cannot rely much on indicators. So this is the overall analysis and the trading possibilities. Okay, mainly you should look for shorting opportunities only in case it does not go up from 50 moving average taking support on Monday. Otherwise, all the factors are indicating that price of gold will fall, or the price of gold USD will go down. So these are the possibilities and trading opportunities on gold USD. Hopefully you have understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care. See ya on Monday.